Let's start with Bitcoin's beginnings. Dr. Patel, what motivated its anonymous creator, Satoshi Nakamoto, to design Bitcoin back in 2008?
Great question. Satoshi was responding to the financial crisis and the flaws he saw in centralized banking. By releasing Bitcoin's white paper, he introduced a digital currency that operates without intermediaries, using blockchain to ensure transparency and trust.
That's interesting. How does blockchain, the foundational technology, actually work compared to traditional banking ledgers?
Traditional banks maintain private ledgers, but Bitcoin's blockchain is a public, distributed ledger. Imagine a giant, shared spreadsheet that anyone can verify, but no one can alter retroactively. Each transaction is grouped into blocks, which are then cryptographically linked.
To clarify for listeners, does this mean blockchain inherently prevents fraud?
It significantly reduces certain types of fraud, like double spending, since every transaction must be validated by the network. But it's not a cure-all. Mistakes or scams can still happen outside the protocol, which is a key nuance as we transition to discussing security.
Transitioning to security, Bitcoin's mining process is often described as both its muscle and its Achilles heel. Can you walk us through how mining works and why it's so crucial?
Certainly. Mining is essentially a race to solve complex mathematical puzzles. Miners validate new transactions, and the first to solve the puzzle adds the next block to the blockchain, earning newly minted bitcoins as a reward. This process, called proof of work, protects the network from attacks.
That sounds energy intensive. Critics argue Bitcoin mining consumes more electricity than some countries. What's your perspective on the sustainability debate?
It's a valid concern. Cambridge University estimates Bitcoin's annual energy use rivals Argentina's. However, some miners are transitioning to renewable sources, and there's ongoing research into greener consensus mechanisms. The challenge is balancing security with sustainability.
Are there hypothetical alternatives to proof of work that could address these issues without compromising security?
Absolutely. Alternatives like proof of stake use far less energy by selecting validators based on the amount of cryptocurrency they own. While Ethereum is moving in this direction, Bitcoin's community values its proven security, so change is slow and contentious.
Let's delve into Bitcoin as an economic force. Its price swings are notorious. Dr. Patel, what drives this volatility compared to traditional assets like stocks or gold?
Bitcoin's limited supply, capped at 21 million coins, fuels scarcity, while speculation amplifies short-term price movements. Unlike stocks, Bitcoin doesn't generate cash flow or dividends, so its value is driven largely by perception and adoption rates.
Considering its volatility, some argue Bitcoin can't function as a stable currency. Are there instances where it acts as a reliable store of value?
Interesting point. In countries facing hyperinflation, like Venezuela, citizens have used Bitcoin to preserve their wealth. However, for everyday transactions, its price swings pose challenges. This dichotomy sparks debate about Bitcoin's primary use: digital gold versus digital cash.
Given its disruptive potential, how have governments and financial institutions responded to Bitcoin's rise?
Responses vary widely. El Salvador adopted Bitcoin as legal tender, aiming to boost financial inclusion. Meanwhile, China banned mining and trading, citing financial stability risks. Globally, regulators are still grappling with how to integrate or restrict cryptocurrencies.
As we look ahead, what major innovations or hurdles might shape Bitcoin's future?
Layer 2 solutions, like the Lightning Network, aim to make Bitcoin fast enough for everyday payments by processing transactions off-chain, then recording them on the main blockchain. This could transform usability, but adoption is still in early stages.
That's promising. But persistent issues like scalability and regulation seem daunting. If a country like the US enforced strict crypto regulations, how might that impact Bitcoin globally?
A major economy imposing tight controls could drive innovation offshore or encourage decentralized exchanges. However, Bitcoin's borderless nature means it can adapt. Historically, clampdowns have slowed growth but haven't stopped adoption entirely.
Finally, do you foresee Bitcoin coexisting with central bank digital currencies? Or is competition inevitable?
Most likely, coexistence will emerge. Central bank digital currencies might handle mainstream transactions, while Bitcoin serves as a decentralized alternative or digital gold. This interplay will define the next era of money, making the coming decade pivotal for financial innovation